Welcome to ShortView Trading. This is your morning market hit for Friday, 1st of May. What matters today for traders? So markets were weak yesterday, having squeezed higher this week into the central bank meetings, i.e. the Fed and the ECB, and key tech earnings. Yesterday, the Nasdaq was flat but weak after hours as Amazon and Apple reported, with both stocks down meaningfully after they reported their earnings. The S&P was weak during the session. There was some marked weakness for various key indices, including the Philly stocks and some of the cyclicals in the States, and indeed European equity markets. So having rallied into key central bank meetings, key tech earnings, markets have since rolled over. And as you can see from the S&P Fibonacci in front of you now, the S&P index looks like it might be failing at that key Fibonacci golden ratio, the 61.8% retracement ratio. The Nasdaq also looks as though it may well be starting to fail at a key retracement ratio, albeit a slightly higher one. And we also had a key day reversal, which is a sign of a technical near-term top in the stock 600. Over and above that, volumes picked up a bit yesterday. And following on from the strength in cyclicals earlier this week, the cyclicals have become short-term overbought relative to the defensive sectors, as you can see from the chart we're showing you now. Added to which, it's interesting to note that bond yields haven't really backed up in the last few weeks, and therefore haven't really confirmed the bounce in cyclicals relative to defensive sectors. Typically a backup in bond yields consistent with anticipation from the Treasury market of improving growth outlook, and that therefore normally correlates with cyclicals relative to defensives. As you can see from the chart though, that hasn't played out in the last few weeks during this relief rally. In other words, there's another sign that points to the idea that this is just a relief rally and nothing more. Over and above all those factors, our short-term market timing models, the 1 to 2 week models, remain very much on sell or rolling over from sell. Our short-term risk appetite scoring it's been on sell in the last couple of days, showing you that the market's been greedy in the near term. It's now starting to give that back. Added to which, the technical scoring system shows the market's been overbought and is rolling over from those levels in the last couple of days. Whilst there's little downside put protection, and skew, as we discussed yesterday, has been picking up, suggesting professionals are starting to worry about the risk to the downside from here. So given those factors, we remain biased to the short side in this market. For full details on how we're playing this, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, obviously continuing to watch price action and stress in financial markets and anything from policymakers. But on the macro front, it's ISM manufacturing out of the States. This is always a key data point coming out on the first of the month, reflecting the activity in the prior month. So that'll be watched closely. There's a lot of UK macro data out this morning, including consumer credit, money supply and lending and so on, which will be interesting from a UK perspective. Added to which, of course, the US quarterly earnings season continues, with more companies reporting today, albeit we've had the big tech stocks this week. So that's it from us. That's your morning market hit for Friday the 1st of May. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter and or Facebook. Simply search under ShortView Trading. So stay safe, thank you for listening and trade well.